All right, so let's start with the big story that we are tracking on WION this hour, where Sri Lanka has now interestingly raised fuel prices and has also warned of possible fuel rationing in the days to come, as the country is in fact struggling to get enough funds to import oil. This as Sri Lanka's foreign remittances have now fallen to a new low in almost about a decade, worsening the economic crisis in the country that has also sparked food shortages as well. Now, the CPC and the Lanka IOC, the island's sole fuel retailers, have hiked petrol prices by more than 10%, with smaller raises for kerosene and diesel. The move has come just days after the international ratings agency Fitch downgraded Sri Lanka due to fears of the possibility of a sovereign default on its $26 billion debt. The foreign exchange reserves are almost depleted, and authorities have shuttered the island's only refinery last month. The latest price increase for petrol and diesel is aimed at discouraging consumption. Severe doubts linger in the government's ability to meet its debt obligations in the next 2-3 years. Traders in Sri Lanka have struggled to get dollars to finance import of food, medicines and raw materials. This after the island's tourism-dependent economy has been completely hammered by the pandemic. Supermarkets have rationed staples such as sugar, lentils, tinned fish and rice. The government had foreign reserves of just about $1.58 billion by the end of November, down from $7.5 billion when President Gotabaya Rajapakse had taken charge in 2019. The central bank has appealed for foreign currency, even loose change that people may potentially have after returning from overseas trips. The island's economy has seen a sharp drop of almost about 17% in terms of foreign remittances this year. WION is now available in your country. Download the app now and get all the news on the move.